Let us bring in our all-store floor show. Retired Army Brigadier General Anthony Tata says Putin's endgame is to seize Kiev, what NATO and the U.S. need to do now to stop him. Lipow Oil Associates President Andy Lipow on how high nat gas and oil prices could go. Raymond James, Washington policy analyst Ed Mills on where equities move next. And Nat Alliance Global Fixed Income Head Andy Brenner on the message the bond market is screaming out to investors right now. Let me bring in General Tata first. It's just after, 10 p.m. East in Ukraine right now. And for all intents and purposes, Putin has seized two regions in the east, Luhansk and Donetsk. What is his next move, do you believe, General?
Hey, Liz, great to see you again. He brought in elite troops as air assault troops, paratroopers from the north, two divisions from the east to seize those regions. He's going to move all the way to the western border of those regions, pull in his logistics, tuck it up tight underneath those units so that he can then continue to push forward west all the way across the country. And, what the president talked about is reinforcing the Baltic states to the north. And then, of course, you've got Romania and Bulgaria to the south, all NATO nations. And then, of course, you got Poland, Slovakia, Czech Republic, and so forth to the west. And so this is a real issue here as Putin carves out the rest of Ukraine to use as a staging base to put pressure on NATO.
Well, yes, exactly. And here you go. You look at the map and you see, and what we don't see here, Belarus is not, put in here, but Belarus is an issue because that leadership is very pro-Putin. And yes, right. you mentioned, of course, Romania, and who knows what he wants next. You do believe he does. But, General, when we look at, say, for example, the tenor and the feel that this nation has for getting involved in something like this, the New York Post has an op-ed today calling Vladimir Putin, and it's pretty stark. It says, "Madman, Putin must be stopped now." How do we do that, General?
Well, I think the first order, Liz, is to tighten up NATO. It's fractured after Afghanistan. That was not a good showing for us or for NATO. We left NATO nations out there to hang. And so now we've got to regroup NATO. We've got to have some leadership there. And we've got to get air defense and missile defense into all of our allied nations there along that border, if you will, between NATO and what is soon becoming the Russian republics to the east, Belarus and Ukraine, and that's the key. Is we get into a firm defensive posture. It's almost a Cold War feel to it, where we position tanks and airplanes to be able to handle the fabled Russian horde that we talked about for decades and decades.
Well, let me bring in Andy Lipow here because the oil and gas picture is extraordinarily important. And this is a worldwide issue, not just in Eastern Europe, because you started to see the reaction here. And I'm not sure that's really warranted. But, hey, the market is going to be a voting machine at the moment, and it's voting that there will be a shortage. Is the market correct, Andy?
Well, I'm not so sure they're correct, but the prices have been rising in anticipation of a supply disruption, given that Russia supplies Europe with about 3 million barrels a day of crude oil and refined products. I think if there was a supply disruption, there would be an immense amount of pressure on Saudi Arabia, the United Arab Emirates, and Kuwait to fill the supply shortfall because they do have the spare production capacity to do it.
Okay. And when we look at exactly what's going on with Germany, Germany has suspended the certification process of the Nord Stream 2 pipeline. But we kind of knew that was coming. It's pretty impressive to see that Germany is being very forceful when it comes to that. But what struck me, too, is that we now have in another Russian pipeline, natural gas reversing its direction and flowing east. This is Russia's Yamal-Europe pipeline. So now the natural gas is flowing away from that. And you've got to figure here in the U.S., we pay around $4.50 per million British thermal units. How high are we going to see these prices rise for us, even though we're unrelated to that pipeline?
Well, our prices are a little bit constrained due to the lack of export capacity for LNG. But by the way, our export capacity for LNG continues to grow with the commissioning of a 7th facility in Louisiana over the last couple of weeks. I think that here in the United States, natural gas prices could easily get to $6 a million BTUs. But if you compare that to today's price in Europe, which is closer to $25 to $30 a million BTUs, it's still pretty cheap.
All right. I want to get to Ed Mills of Raymond James. You advise certainly big clients about where to invest during both good times and bad times. Some are surprised, Ed, that we're not seeing a more outsized negative response. And when you see that, I mean, we've seen the UK, we've seen the EU, and now the US slapping some pretty serious sanctions on the Russians. What's your worst case scenario for the markets, or does it just get better from here? Actually, Ed Mills, we just lost his signal, so let me go to Andy Brenner. Andy, from the fixed income perspective here, does this take that 50 basis point hike that everybody not everybody, but a lot of people anticipated the Federal Reserve would make? Does that now come off the table because there's too much uncertainty in the world right now?
Absolutely, Liz. I think it was coming off the table before this, but last week there was a 56% chance of a 50 basis point rise. It was earlier today, it was down to 19. So that is definitely off the table. Everything I've seen except from Fed Governor Bullard has told me that Fed governors want to plod along 25 basis points to start in March, maybe again in May, maybe again in June. But I really think the Fed's going to move much more slowly. And Liz, ask yourself this question. If this was really going to be as aggressive a Fed as people are saying, JP Morgan saying 9 rate hikes over the next 9 meetings, why are they still buying bonds? Why does quantitative easing still exist? That shouldn't be there. So I think this is going to be a slow-moving Fed, move a couple of times, wait to see what happens. I think inflation is going to subside, but the next 2 inflation numbers are not going to be good. PCE on Friday and CPI a week from Tuesday. They're going to be bad. Yeah. So you have to get used to it. But Powell speaks next week, and we'll have to wait to see what he has to say.
As always, it hinges very much on Powell versus Putin at the moment. Ed Mills, we've got you back. As we look at the markets at the moment, there is this belief that things could have been a lot worse and that we've seen maybe the worst of the sanctions. Do you agree? Or how much more downside momentum do you anticipate? And I'm not even talking about the Russian markets. I mean, the RTS, the Russian Stock Exchange, has cratered 19% over just 5 sessions. But here in the United States, what do you anticipate?
Yeah, Liz, when I've talked to clients today, there is a sense that we could see an escalation before a potential de-escalation. There's certainly a lot of risk that is still here. But in terms of what Biden announced today, it's probably about a 3 or 4 on a scale of 1 to 10 in terms of how aggressive could he go. That there's a sense that we're giving Putin an off-ramp should he want to take it. And so I think people are looking at what Putin did over the last 24 hours as saying, is this the opportunity for him to declare something before he walks back on Nord Stream 2? They've turned off something that's not yet turned on. So that could be a big give back to Russia before any natural gas actually was even flowing through the pipeline.
Goodness gracious. We do have the Dow down 329, but at the moment, the Russian-based ETFs that we just showed are getting absolutely crushed. Great to have you. Ed Mills, Andy Lipow, Andy Brenner, and General Anthony Tata, also the author of the book Chasing the Lion. Great to have all of you. We appreciate it on a very touch-and-go day. And